Hi, this is Charting Man Dan of thechartguys.com, home of technical analysis education. Click the link for a free week trial, no credit card required, and gain access to our multiple live broadcasts daily, community chat room, educational videos, nightly watch lists, and more. Invest in your education and future and join the community today. Looking at SPY on the daily and weekly time frame, big time dump, and what stands out on this daily chart is the volume. Bullish volume, non-existent on this move to the upside. Bearish volume, standing out in your face. So the loss of the middle Bollinger Band support, bearish, that is now resistance at 208.78. And this break right here, the low from 2 weeks ago, we had a bit of a double bottom, 208.89, 208.86. The loss of that level was a strong indication for the bears. We are on the verge of a bearish MACD cross. Next support to be tested is 207.69, which is the 50-day moving average. And if that is lost, we're coming back down to this 204 neckline of that head and shoulders pattern, which didn't end up being a head and shoulders pattern because that support did hold at 204. So the bears are creeping in. We're seeing a lot of profit taking leading up into the Fed. This coming Wednesday, we have that announcement at 2 p.m. Eastern as a result of their meeting. But we're definitely seeing profit taking and a sell-off leading up to it. Wondering if there's either a leak or maybe people anticipating the potential for rates to raise as planned. Bearish reversal candlestick last week currently being confirmed on the weekly time frame. We're going to be using SPX still on the weekly time frame to get those clear levels. 10-week support is 2076.70. If we lose that level, the 100-week is down at 2034.18. And that 2040 is the key level here on SPX that lines up with that 204 level on SPY. So obviously it's going to be very interesting heading into this Fed meeting with what's going to occur. Getting some of this bearish action out of the way early. Wondering if that may soften the blow if we do get news that the rates are going to raise as planned, regardless of that bearish jobs report that did come out. So weakness is here. The time frames, shorter term time frames, hourly chart for SPY, still not getting too oversold. We're right around 30, the low 30s. So there is still some potential for continuation to the downside, but we will be anticipating a short-term bounce to occur in the near future, and I would anticipate that to occur perhaps before Wednesday, 2 p.m. Eastern, when that announcement will come out from the Fed. So we'll be on top of it as usual. I appreciate you watching. Have a great night. Thanks for watching. The Chart Guys community has compiled trader tips from dozens of traders over the last year and put together a free ebook you can access by clicking the button and entering your email. Have a wonderful night.